Welcome back everyone. On March 2nd, 2022, coal reached $436.50 per ton. The day after, it pulled back to $353.75 per ton. This euphoria was not over. On March 8th, it reached an all-time high, a new all-time high of $439 per ton. This record price didn't last long, and it wasn't a random event. The price of coal had been climbing for some time and has managed to maintain its historically high price point. For the few of you who were paying attention, there have been signs, breadcrumbs along the way if you will. Current coal price is the culmination of many factors which have taken place over the last few years. Coal has been being phased out for a long time, partly because it has a long list of problems, starting with its mining and continuing through the use of coal. Small-scale mining operations date back thousands of years. However, the industrial-sized mines we are familiar with are a much more recent development. These mines only date back to the 18th century. The hazardous conditions of coal mines led to coal being viewed as a necessary evil. Two significant problems existed for miners. There was an ever-present threat of mine collapse and the almost certain inevitability of black lung disease. Coal mines disturb the soil under which the coal is deposited. And starting in the second half of the last century, laws were passed to require coal miners to restore the land or at least make sure the mines were no longer dangerous. This means enormous amounts of time, energy, and money needed to be dedicated to restoring coal mines. More recently, countries and companies have been enamored with the idea of reducing global emissions and have chosen to take aim at the outdated energy source. This sentiment culminated in the COP26 in Glasgow, where many countries agreed to accelerate the phase-out of coal. Coal phase-out isn't anything new. It's been in the works for many years. Canada, for instance, has stated its original plan to phase out coal would be accelerated and Canada will be coal-free by 2030, a short. Additionally, many Western European countries have planned to phase out coal by 2030. Some countries plan to eliminate the use of coal in a more conservative timeline of 2040. As the demand for coal was being reduced and the price of coal dropped, it stayed low throughout the 2010s. It became increasingly difficult for coal miners to generate profit. Coal's struggle to stay competitive stems from the simple facts and circumstances. The easiest coal to mine has long since been mined and consumed. That means coal being mined today is much more difficult to reach in terms of geography and geology. The higher costs and increased technical capabilities required from coal miners today mean that this hard to reach coal deposits are only able to be mined by a short list of companies. Many of these largest coal companies filed for bankruptcy protection during the 2010s, including the giants Peabody Energy and Arch Resources. Part of the reason why coal demand was slowing was because of the abundant alternatives in the market. Oil, natural gas, and nuclear energy were all seen as favorable alternatives to coal at one point, and they're all at different times abundant. However, the failure of these alternatives to be there when power was needed meant that the price of coal rose to meet the demand for coal. These three alternatives failed for different reasons and at different times. Countries began holding negative views on nuclear energy for different reasons. Germany is just one country dedicated to eliminating the use of nuclear energy, and the policy has been in place for quite some time. Various events, including the 3 Mile Island incident, Chernobyl disaster, and the Fukushima nuclear disaster, were all important to strengthening the resolve of the German nuclear phase-out, ensuring that one of the substitutes to coal could no longer be used. Germany is not the only country phasing out nuclear energy. As the aforementioned Fukushima nuclear disaster was severe enough to instigate a total shutdown in Japan of nuclear power plants. The United States has been reluctant to bring new reactors online, and even canceled or delayed some that had been previously planned. There are many different sides to the argument about nuclear generated power, but the bottom line is, as long as the list of countries refraining from nuclear power generation continues to increase, one of the substitutes to coal will remain on the sideline. Additional restrictions to coal alternatives popped up during the second quarter of 2020. April 20th, 2020, the price of the front-month future oils contract, WTI, cratered from $18 to negative $37 a barrel. Brent crude, a more flexible contract, also crashed to under $10 a barrel. This phenomenon was a result of too much oil and not enough storage. The effects of the short-lived price peculiarity would have an impact on coal price. This dramatic and previously unthinkable event was partially caused by the reduction in oil demand, and it led to a reduction in oil supply. The price of oil fell. Some producers could no longer afford to produce oil. The price to sell oil was now lower than the cost to produce it. This caused some producers to cease production altogether and reduce the availability of another substitute for coal in the generation of electricity. Similar to oil, Q2 of 2020 caused a reduction in natural gas production in the US. 2020 was the first year in over a decade during which less natural gas was produced than the previous year. As production dropped, coal was used to fill the void in electricity production capacity. Another effect of the shutdowns that were characteristic of parts of 2020 and 2021 was the collapse of the modern supply chain. Just-in-time manufacturing had been a marvel of industry and allowed supply chains to become increasingly lean and efficient. However, when part of the supply chain was shut down, it became evident that just-in-time methodology had risks, and not all these risks could be mitigated. Port congestion became the norm as containers piled up in port and couldn't be unloaded even if the cargo ships had reached their destination. Seems like the port of Los Angeles, where the ship backlog lengthened by an estimated 10 ships per day, having at one point reached more than 70 ships waiting to unload, showed that the small changes have large knock-on effects. Additionally, events of 2022 have caused a continued disruption to supply chains, and those disruptions have reached the coal industry. With the limited availability of coal substitutes, demand for coal has soared, and the coal distribution network, which is part of the global supply network, has only been able to meet this demand at an all-time high price. All of these factors come at a time when the global demand for electricity is continuing to increase. Global energy consumption has increased almost every year during the last half-century. Demand for energy is increasing globally and specifically across some very large and developing markets such as China. As the world demand for energy increases and the need for coal increases, the price of coal has skyrocketed. Consumers are demanding the end of coal at the same time as it is a necessity in the production of electricity. Even though countries push to end the use of coal and other fossil fuels, it remains a dominant source of energy. Peak coal production was reached in 2013. Even though the near-term outlook for coal and coal miners looks bright, the long-term outlook for the future of coal remains bleak. Since 2015, there has essentially been no investment in coal. This means the coal mines of today are the last generation of coal mine, period. Even the Arch Resources CEO sees future investment in coal production to be unlikely. Coal is in terminal decline. But what's next? Coal companies should continue to generate profits and cash flows from the existing operations because they are part of an ever-shrinking pool of available resources. With no new investment, the major players of today will keep supply low enough to maintain a profitable price and satisfy investors. Coal will be phased out and profits will cease. Knowing when this would happen would be the key to knowing when the value of coal producers will head towards zero. If you're interested in knowing what the large coal miners, Peabody and Arch Resources think will happen, check out this video on screen now.